Hi guys, it's Thomas here from COTbase.com. Welcome to our tutorial videos. This is episode 4, COT Extreme Analysis. And let me add, I believe this is going to be the most exciting episodes of this series and possibly one of the most important ones as well. So the reason why we're doing all this, the reason we're looking at the Commitments of Traders report is we would like to understand what the major players are doing. And COT Extreme Analysis helps you identify, as its name suggests, extreme situations in the market. And what that means is you can imagine traders building up positions, net long or net short, throughout the time for many weeks, months, or possibly even years. And once they reach a level of position, which is huge, and you really haven't seen that in the past, or for very long you haven't seen such an extreme, you can start to imagine that there's something going to happen. The stress level in the market has really reached an extreme level. So let me just open the Australian dollar. That's the first market in this table. Of course, I could look at any other market just to really show you what that means. So we have a 5 years time period in front of us, and right away from 2014, you can see when commercials were at 50,000 contracts net short, large speculators 50,000 contracts net long. That was when the Australian dollar had that top. So that was a signal from the report. It, of course, was present in the market for quite some time, but eventually the market started to decline. Of course, as it did, we gradually reached a bullish extreme. You can see commercials at 107,000 contracts net long level. Now, of course, there's multiple examples on this chart that you can look at, but I'm going to explain to you what the tools at COTbase.com are and how you can use them. So the first tool we have is the simple COT Extreme Measurement, which shows you how many reports ago stood the given data at that level. So we have commercials at 3 reports, large speculators at 28 reports, and small speculators at 2 reports. So let me start or explain this to you on large speculators, simply because there's a larger number, 28 reports ago. It's really simple. It shows you that the 66,111 contracts net short level for large speculators was a level that these traders reached roughly 28 reports ago. So it simply shows you how long ago we had a similar extreme. Now, sometimes when we only have these small values everywhere, it's hard to see simply by looking at the table whether or not there's an extreme. And that's when the COT index comes in handy. We have a 92% COT index value for commercials. Now, what that means, I will show you in a moment. We have to go back to the 3 years look back period. I'm just doing that so the explanation is a bit more simpler, because on the left side over here we have the settings panel. You can see that the COT index is set for a 3 years look back period. Now, of course, you can change that to any look back period that you wish, but for simplicity, we're going to stay at the 3 years. So again, what we're doing is we're measuring a current value on a total range. Now, by range, what we mean here is that we had commercials, the most net short over here in September of 2017 with 89,265 contracts net short, and they were most extreme net long in October of last year, 93,869 contracts net long. And if you add those up, you get a total range of 183,134 contracts. Now, what we will do is we're interested in this change. So basically, if we calculate this range by subtracting 76,169 from the most net long level of 93,869, we get a value of 17,700 contracts. What that means is simply, if commercials were to increase their net long positions another 17,700 contracts, they would exactly arrive at the most extreme on this 3 years look back period. Now, what we are interested in is this percentage, and by subtracting 17,700 from the total range, we get a value of 165,434, which then can be divided by the total range and to get that value of 92%. Now, this might sound a little bit complicated, but believe me, it's really simple. And of course, the reason we're here is we do all that calculations for you, so you can only simply look at the table and find these larger extremes. And of course, COTbase.com also allows you to look at these COT indexes visually. So if you click over here, you get the COT index. Of course, it could be a good idea to take down the net positions of traders, and then you only have the COT index in front of you, more easier to see it. And on the left side, you can see that the value is between 0 to 100%. So you have the COT index in front of you. And the last tool is the COT move index, which really measures larger changes in the COT index itself. You can see that in this latest report, we only had 1% for commercials, 1% for large speculators, and 0 for small speculators. But if you look on the chart itself, you can see some examples when there were larger changes in the COT index. Now, I won't get into details for that because in the previous episode, I explained to you changes in the COT report itself, the COT change analysis, and the mathematics is exactly the same. So these are the three main tools that we have, and I believe it's really important to follow the report and see these larger extremes because they really help you identify large shifts in the trend. So thank you very much for your attention. This was episode 4, COT Extreme Analysis. I hope you enjoyed it, and I hope to see you in the next episode. Take care. Goodbye.